All right, we are now thrilled to welcome back our mortgage expert, Tucker Maxwell. With 6 years of experience at Guild Mortgage, Tucker stands among the top 1% of originators nationwide. His expertise lies in providing tailored loans for both real estate agents and investors. Real estate investors, both real estate and real estate investors. Sorry, I screwed that up, Tucker. Sorry about that. Welcome
Okay.
to the show.
Yeah. Thanks, Dan.
All right, so let's talk about these down payments. When it comes to getting ready to save up enough money for it, there are many questions like what's going on, how much do I need to save, or I don't have any money, what can I do? So we're going to answer all of those questions today. So let's start with the different options that are available.
Yeah. So there's many different loan types that we can use, and they all vary in the down payment requirements. I think the first myth we should uncover is that you don't need 20% to buy. So just starting right off the bat, 20% is an urban myth that it's a requirement for all loan types, but it's really not. There are several different loan types, whether it be conventional, FHA, VA, or USDA, that allow for much less than 20% down.
Are you still with us?
Yeah, I'm here. Are you?
Okay,
there?
that's weird. We had another hiccup. We're having network issues today, folks. Apologize. You were saying about the conventional loans, the minimum required.
Yeah, so with conventional loans, we can do conventional loans with as little as 3% down, which is, again, an area where a lot of people think that conventional loans require 5% down, but both Fannie Mae and Freddie Mac both offer conventional options with as little as 3% down.
And right now, the conventional loans actually have the better rate than the FHA loans, right?
Absolutely. Yeah. It's more tailored towards better credit profiles than worse credit profiles. But yeah, absolutely. Conventional and FHA are pretty comparable today.
And what's that credit profile that we're looking for?
So on a conventional loan, you're probably looking for credit scores above 700 or 700 and above. Where it differs is in the mortgage insurance. So mortgage insurance today is a risk-based factor. So they're looking at things like down payment percentage, credit scores, number of borrowers, things like that. And so since we have private mortgage insurance involved, they're going to charge less for a great credit profile. So typically on better credit profile borrowers, will typically lean towards conventional because the mortgage insurance is much less than what the FHA requires.
All right. What about FHA loans? What are the down payment requirements?
Yep. On FHA, it requires 3.5% down, typically. There are some scenarios where we may need a bigger down payment, but really the advantage of FHA is a 3.5% down payment, a great loan that is designed to help less credit positive borrowers get into loans. It's backed by the Federal Housing Administration, so they share in the default risk. So it allows us to offer competitive terms to them, to these borrowers, without us taking on too much of a default risk.
Okay, so far we've gotten 5% and 3% and 3.5%. And you said that a lower credit score possibility on these FHA loans, but there's some increased costs associated with originating it. Yeah.
Correct. Yeah. We here at Guild Mortgage specifically, we'll do FHA loans as low as 580 credit scores, which is pretty generous. Typically, most lenders are at 600 or maybe 620 to do a FHA loan, but we'll do them at 580.
580. Okay, great. The next one we have is VA loans.
Yep. So VA loans, really the true advantage of a VA loan for our active duty or retired service members is that they can do a loan with zero down. So they don't require a down payment whatsoever. And then to further that advantage is without a down payment, they also don't have mortgage insurance. So it's really a slick program as a way to thank them for their service.
Yeah. So veterans have an advantage here. We were actually talking about this today too. And there's this big lawsuit about commissions. We talked about it a couple of weeks ago here on this podcast. They're not allowed to pay commissions either.
Right. Yeah. Exactly. Yeah. And there's a certain amount that we're allowed to charge a veteran on a loan. So they cap us on total fees. Really, they've just designed it to really help them into homeownership. And it's a fantastic program for veterans.
Yeah, love that. Okay, now we're getting into the realm that zero down payment is strictly for veterans. But this next product, USDA, I understand is one that you can get away with less down.
Exactly. Yeah. USDA loan, just like the VA loans, allows for zero down or 100% financing. They're typically reserved for more of our rural areas. But Dan, to your listeners here on the east side specifically, there are some USDA areas, especially in closer to the mountains, as you mentioned. But I would just recommend that people look into these because they typically think farmlands or in the country, but there are
I'm
actual.
always thinking about USDA Prime is what I'm always thinking about.
There you go.
It's the same organization that backs this that actually inspects the cattle, the quality of the cattle.
Right. Yeah. And the reason they offer this loan program is they try to encourage people moving to these to help build out those communities, bring resources to the area. Homeowners typically stay in their homes longer, are employed. So it's just a way to incentivize people to move to these more rural areas.
Now, do you have a map or zip code map that you plug in to determine if an area qualifies for that?
Exactly. Yep. The USDA puts out a map and we can just run an address through it.
Okay. Yeah. So you most likely can't use these for the Seattle city limits. But I'm thinking Snohomish, Snoqualmie, Falls City, North Bend, Maple Valley, parts of Issaquah would all fit depending on exactly where you're at on the map.
Absolutely. Yeah. Buckley, Enumclaw, further south too.
Yep. Okay. So now jumbo loans, these are going the other direction. This is for people that are going over 800,000 in mortgage.
So we'll preface this with the big three: King, Pierce, and Snohomish counties. We can do conventional loans up to 977 250, so just under $1 million, with as little as 5% down. Once they go over that amount, and I just use $1 million just as it's easy for people to remember. Once we go into that $1 million loan amount area, you're really looking at loans that require at least 10% down. And just because the risk is bigger, we're writing a bigger loan, we need to have a little bit more skin in the game from the borrower. So for jumbo loans, I would say expect 10 to 20% requirements.
10 to 20%. So it's probably closer to 20 because of the risk tolerance in order to get the best rate. Yeah.
Exactly. Yep. Exactly. And we didn't touch on debt to income ratio limits. Each of these loan types has a different amount of the income we can use on their mortgage payments and their other bills. On a jumbo loan, we're going to be more conservative with that too. So not only are we going to require more out of pocket, but we're going to make sure that there's some extra disposable income left over for these borrowers.
Okay. Awesome. All right. So then going on to second homes or investment properties.
Yep. So for second homes, we can do as little as 10% down. And I myself bought a second home with 10% down. It's a great option, but it needs to be a true second home. This can't be a home that's on Airbnb or rented out. It needs to be your second property that you spend time at. And every state has requirements as to how many days you need to occupy the property for it to be a second home. So I always make people really clear on that. Like, this needs to be your second home, your vacation property, not an investment. On an investment property, you're really looking at about 15% down, sometimes 20 or 25%. Much stricter guidelines on debt to income ratio and reserve requirements. That's the other thing that comes into play on investment properties, is we want to make sure you don't only have that minimum 15% down, but that you have 6 to 12 months left over of every mortgage payment that you have after that transaction closes, because we know as a lender, you're going to protect your home primary residence first when times get tough, and you're going to let that mortgage on that investment property go. So we're just going to, again, want more skin in the game.
Okay. So now we've talked about all conventional borrowing, but are there any programs out there that allow somebody to basically put zero down that's not USDA and that's not VA? Is there any other programs?
Yeah. So in Washington State, we have very generous down payment assistance programs. So through Washington State Housing Finance Commission, they will cover the full down payment requirement with a no interest, no payment loan. It's a little mini loan. It sits in second position on the title that will cover the full down payment requirement. And so just in the last few months, I've helped 2 families purchase through Washington State Housing Finance Commission programs. And they basically brought in enough money to cover their inspection fee and earnest money. And after that, no other money out of pocket.
Yeah, and I want to just highlight that if you're watching this and you hear no down payment and all that stuff, there are still costs associated with purchasing that may not be able to be covered by the down payment assistance or by a credit from the seller. So just understand that I've been able to help some clients really have no money down, but every situation is going to be a little different, and what the bank will allow, that's important. So you should, in our next segment, you'll learn how to save more money if you need to. I know that because that's why we have him coming on here. Is there anything else? Any other way to get down payment?
Well, there's grant programs too. So depending on municipality, like the city of Seattle, up in Bellingham, down south in Tacoma, there are city programs as well that are, again, trying to incentivize homeownership in certain neighborhoods. And so they'll cover the down payment. And then a lot of us lenders have partnered with Freddie Mac and, with Guild, we have our own program as well, where we'll cover a portion of the down payment as well. So it really is specific to the borrower. But yeah, I would say if down payment is the hurdle, to talk to a lender, and you might be able to buy before you sooner than you think.
Gotcha. Okay. And then borrowing from someone or something, or even I've heard of people borrowing against their 401k.
Yeah, absolutely. So to buy a primary residence, you can take a loan against your 401k. We don't count the payment in debt to income ratio, so it's a great option there. And then you, in effect, pay yourself back over time with just increasing your 401k contribution. So that's a really great way to get down payment funds. You could use a gift. So if you have parents that are going to give you an inheritance, you could just speed that up and get an early inheritance today to buy a home. So I always ask that, is there any money that you foresee getting down the road that we can maybe tap into today?
Yeah, I mean, that's a kind of you might talk to a wealth planner, because that's a really smart way for your parents to hand down the inheritance that they plan on handing down to you and not incur as much of a tax, and we should definitely have a family and estate planner come on and talk about the tax ramifications. However, I've heard there's loopholes, and they're not really loopholes. They're just designed, the laws designed how they're designed in order to incentivize, building wealth in the family. So, man, that would be super powerful if you have a conversation with your financial advisor about how to go about this in a smart way. That's a really good way to consider.
Exactly. And then the last thing I would say is talk to your employer. A lot of employers offer some homeownership benefits. So they may cover some of that or give you some thing, because there are a lot of statistics around retention, employee retention, and homeownership. And so there's an advantage to a company to give or grant some money to their employees to help them be a homeowner, because they're more likely to stay in the area. So just another avenue to talk to. And if your human resources department doesn't offer a mortgage or a home buying resource, to talk to Dan and I, and we can come up with a plan for that company, and whether they contribute or not, we can provide services to the company.
Awesome. Love it. Well, Tucker, as always, you brought some great information. I think our listeners are going to enjoy the details on this to kind of get ready for homeownership if they haven't already. So we're going to take a short commercial break, and then we're going to do our business spotlight. So come back after this short commercial break.
Are you wearing too many hats in your small business? Finding yourself wondering where the time went? Do you ever get frustrated with technology that should just work? Then you need Nerds to Go, America's small business IT department. 425-800-NERD. At Nerds to Go, we provide friendly, professional, and reasonably priced solutions for small business owners. From network troubleshooting to hardware repair or training, let Nerds to Go be your IT department. Call Nerds to Go today. We'll come to you. 425-800